Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is March 14th, 2025. S&P currently sitting at, we haven't been this low on this number in a while. 55.88. That would be your lowest price. I mean, we're back to where we were in September. So, yeah, definitely some damage done over the last 2 weeks, probably over the last 4 weeks, and really just no let up this week. Huh, Kevin?
No, not really. I mean, kind of yesterday had a few glimmers of hope that we might try to buy that back up in the S&P, kind of back towards like 5,600, 5,700, something like that, but just, I don't know, never really stuck. So yeah, it's been unfortunate.
Really weak intraday rallies, of course. I mean, they got another one going this morning. Markets are up. S&P at least up 1% as of this recording. But they've done this a lot over the last few weeks. They've turned into major nothing burgers by the close. Yeah, really persistently down market. I think this was brought up last week, but still no concrete or common evidence of a flush. No 80% down day yet.
Nope.
No spike in people rushing to buy puts and betting against the market. Just a relentless pummeling.
Yeah, what did Dave call in the chat yesterday? A slow bleed, which I think
It feels like such a slow bleed. Yeah, broad indices are terrible, but then you have these sessions where, yesterday we only had 65% of stocks down.
Which I would not have guessed that.
No, There's been a few sessions where I would have definitely put some money on the table that we had an 80% down day. And now we've gotten close. We had some 70s, but no magical 80% yet.
No, I mean, it's actually just kind of wild looking at it, just how controlled it's been. I mean, it's about as orderly as a sell-off as you could probably get. Like, kind of like you're doing a fire drill at school, right? Like fire alarms go off, everybody gets in their lines, and you just exit the building in an orderly fashion.
Yeah.
Kind of what it seems to be.
All in step together.
Mm-hmm.
I think you said, we only have three sectors above
a 200
day.
Yeah, so the only ones, financials, utilities, and communication services.
Okay.
And I would say, I mean, really, utilities they actually did have one close below the 200-day. Was that last Thursday? And then kind of rallied from there. I would say on an absolute basis, they probably held up the best. I mean, financials have been selling off as well, but, probably like, what is this? Like 3% or so from the 200-day, and it's kind of held that, this week. Kind of just chopped around. And I would say, communication services, that's been a pretty orderly retreat as well. But, that was kind of one of the strongest sectors. So they had a little bit more wiggle room there.
Yeah, finding some support here where we did mid-January.
They're around $95 on XLC.
Yeah.
It would make sense if they can hold it here.
Held above its election gap, which cannot be said for many sectors and sub-industries. All four major indices below their 200-day moving average. I believe, if we're back in September, then we're clearly below all the election moves. So definitely, U.S. stocks have taken a hit. Foreign stocks, and as someone who loves to roll their eyes anytime European equities get brought up, I got to hand it to them.
Yeah, they're doing well.
Relative charts continue to look good, continue to improve. Yeah. Hey, I'm not gonna deny it.
No, it's even not like it's not just Europe either. Latin America's been looking pretty good. Peru looks good. Argentina, had a bit of a if you look there for a minute, but they've kind of brought it back up.
What about China?
China
China's
Good.
strong.
Mm-hmm. So, I mean,
China today using FXI. I'm not going to go and look at all the Chinese indices and local currencies, but China FXI back to its highest price since February 2022. So we were just entering that bear market back then. Obviously, China itself had been a downtrend since February 2021 at that point. So they were certainly a leader to the downside. Will be interesting to see if they are a leader to the upside this time around.
for sure.
And U.S. markets didn't react for a year. So I hope that we're not getting the opposite this time. We're going to have to wait a year for U.S. equities to start going up.
That'd be something.
I mean, relative chart, kind of hard to deny that.
Mm-hmm.
Intermediate term, clearly long term, you haven't missed anything. But if there was going to be a multi-month, multi-year turnaround, I could definitely see it starting like this.
Mm-hmm. Yeah, I mean, because it's almost like it's harder to find things internationally that don't look as good right at this point. And really, the only things like Australia, not really all that impressive. New Zealand, but I mean, we talked about Latin America looks fine, Europe fine, Asia.
Yeah, I go through 1 week returns, and it's still, I mean, it's all straight down: Austria, Greece, Poland, China, internet, Finland, Spain, European financials. And I mean, I'm not going to read through all 29 or however many are on here, but yeah, go find things that are green over the last month, over the last week. And there's very, very little in regards to equities. In fact, I barely see any. I mean, like, I don't see anything on here.
And I mean, with, we talked about the three sectors, I guess, that are still above their 200-day. I mean, within financials, I know insurance has started to look really good, really just broad insurance. So like even the brokers, services, like all your, multi-line names, property and casualty. I mean, things are looking pretty good there.
No tariffs on insurance.
Right? Yeah, I guess not.
It's one place you could probably hide out if that's something that you're spooked over.
Mm-hmm. And I mean, kind of the lead up before this was pretty heavy, like broker dealers, exchanges, your larger banks, investment banks, managers. I mean, some of that's cooled off, like your banks, bigger banks, not necessarily looking all that good. JP Morgan holding the 200-day today, closed below it yesterday.
Yeah.
Which kind of just closed that election gap, really. Well, not quite. Pretty close. I mean, it was right around there. So is that just kind of like a gap fill and then go? I don't know. But, I mean, like there's still a good handful of brokers that still look pretty good, which you talked about, what, IAI before or what is it?
Yeah, IAI,
right? Yep. I mean, that's kind of holding the 200-day for now. The exchanges still look fine. I kind of already talked about insurance. So, I mean, there's, things in there that actually look pretty interesting. It's not like they're only performing on a relative basis, right? These are still charts that look good on an absolute basis, which I guess is a plus. And like within communication services, I mean, your telecom names are still holding up pretty well. I mean, I wouldn't say that they're the most inspiring absolute charts by any means, but they really didn't get hit all that hard. Netflix is kind of holding up for now. Meta's hanging in there. So I guess it's not like everything necessarily is getting sold.
What about gold? How's our gold friends doing?
Looks pretty good.
Pretty good.
Yeah, that move yesterday above, like using GLD above like 270, 272 was a pretty nice move yesterday.
Yeah, those relative charts, they can really start to become attractive. Harder when broad market's going up.
Mm-hmm.
But once those major indices start going down, things that are flat or continue moving higher certainly sort of stand out more. I would put gold and silver in those categories.
Mm-hmm. I know you talked about copper, I think, earlier in the week.
Yeah, copper was back up there near its highs. I haven't seen where it's at. 490, right? It's 488 today, right? So, and I mean, a lot of people will tell you, oh, copper looks fine. That's supposed to be like a leading indicator, not for us per se, but pretty common leading indicator. People like to see how the price of copper is doing. kind of a canary for industrial production and things like that, but has not rolled over. Maybe that's a broad commodities thing. Maybe it's a weaker dollar thing.
Yeah, that's a good point. The dollar's been getting hit pretty hard lately.
Real tough. Real tough. Right? And so this goes back to, I thought weak dollar, good for stocks.
Mm-hmm.
Well, here we are in a period where that's...
For international equities, maybe at least.
And yeah, I think you could say, we had a strong dollar, strong stocks starting back in September, which had also been people kind of ignore that type of stuff when everything's working. So we'll see. And I think it is important to bring to the attention that our sponsor for the podcast, ADPV, listed on the NYSE, helps investors access two of the most prevalent factors in markets, momentum and relative strength, through proprietary identification methods. The Adaptive Select ETF attempts to own the strongest 25 large cap stocks and when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving short-term treasury bills and cash during market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com, calling 1-833-880-5200. Investing involves risk, including possible loss of principal, distributed by Quasar Distributors, LLC. That fund does go to cash, looking at a 5 and 200-day moving average. When the 5 is below 200-day on a Friday, the following week, strategy moves to the short-term T-bills that were mentioned, and that will get its first signal since October 2023.
It's been a nice run.
It has been a nice run. We'll see. It could always be a fake out, right? We could be right back in equities in a week. That's how trend following happens. But for the sake of this strategy, long-term trends, we have now triggered we're going to go hang out. We're going to go hang out in the right-hand lane for a little bit. Maybe next week we're on the podcast, Kevin, and we're 120% long. I don't know. Could happen.
Yeah,
but it will not be happening today.
No. And I think, right, since I've been here, the times where it's protect mode, you really have not seen any action out of international equities.
No.
Or even, I don't think necessarily precious metals like gold have necessarily looked as good as they do now. So kind of an interesting spot, right, where you're essentially just trying to protect.
Totally agree. Yeah,
U.S. equity exposure than total. You're not necessarily in total protection mode, right?
If you told me U.S. stocks started falling apart a month ago, I would say, okay, so I assume European stocks must have started falling apart like 2 months ago.
Mm-hmm.
Definitely getting the opposite. And this is how things change. We sit here and whine about the Mag 7 and large cap tech and how much we would give for a 2003 to 2007 period again. Just maybe this is how we're going to get there.
Mm-hmm. Yeah. It's right. It's nice to be able to identify that and participate in it when it happens. Right?
It would. How? Such a good point. The fact that you can see that real time on a chart and say, hey, this is probably something I should have some exposure to. Pretty cool.
It is.
Well, that's all we have this week. Kevin, I know you've got some meetings to get to.
Mm-hmm.
So thank you all for joining us. Please give us a good review at your podcast platform of choice if you enjoyed our conversation today. Have a great weekend, everyone.
Have a good weekend.